What's going on, traders? Hope everybody's having a great weekend. Want to do some analysis here in the E-mini S&P futures as well as the NQ Nasdaq 100, the tech sector. Of course, before we get into anything, this video is for educational purposes and entertainment, so I hope you are educated and entertained. Got a couple of things I wanted to go over before we really get into the charts. Contract rollover starting this week. So it looks like usually TradingView switches over, rolls the contract sooner than Thinkorswim. I'm going to be monitoring the volume. Typically how I've done it, I've gone with when Thinkorswim does the rollover. And usually that did not really take place until midweek. Now, apparently with the Schwab transfer, they have now rolled it earlier. So I am going to base this video off of the December contract. We're going there anyway. The levels still all hold true. If you Monday, Tuesday, again, I'm going to personally be looking at the volume, and then I'll decide I might trade 1 or 2 more days on September and then switch over. But we will see that how things look in the morning. All right, let's get into the economic calendar here because we've got a big week ahead of us. We just had CPI coming in basically in line, a little bit 1 point higher, but more or less no shocker there. But let's get into the economic calendar here. And of course, everybody really is going to be watching, well, of course, Wednesday, FOMC rate decision. What's going to happen here? Are they going to do 25, 50? There's a lot of debate going on which the right move is. If they're doing 50, it's certainly indicating that maybe they're seeing a little bit more trouble in the economy. But, of course, then we run that risk of inflation resurging, and maybe we get stuck in some type of stagflation situation. So it's going to be very interesting where we are right now. And all eyes will certainly be on 2 o'clock and what Powell says at 2:30. Other than that, really not too much to report on the economic calendar here. Initial jobless claims on Thursday at 8:30, paying attention to that. And then Friday is triple witching, contract rollover. So I personally will not be trading that. Okay, let's get into some of the charts here. And as I mentioned, we are on the December contract, the new futures contract, but Monday is a question mark for which one I will be day trading. If you want the levels, just go back because we are still basically in right back where we started, just right off the all-time highs once again. And so if you are looking for the levels back from September contract, if you're staying on for a little bit longer, then you can just go back to last week. Okay, so let's just take a look here where we are as far as the candle, what and location. What is going on here? Well, we can make a couple of different arguments, certainly from the pattern, quote unquote, trader type of point of view, and we'll just go over first. The candle now has nearly retraced the complete range of last week. Just unbelievable. We can certainly say though, when I talk about the pattern, we have our swing high here. Here we have, pretty much equal highs for 2-3 weeks, right? But now this last week's high is not matching. So I could say that is one slight cause for concern. We certainly have gotten over and breached one of the last stands for the bulls, or excuse me, for the bears here, retaking the bottom part of this balance that we had, that really had given us that shift in the market structure for that push down towards that end of last week's session. And so when we talk also about the certain patterns here, so we have also kind of a price compression, right? We can do a trend line here, we can get one here, right? So we could, now we have FOMC, so is that going to be the catalyst to start to bring us back down or actually start to break us out? All things equal, I would more be imagining that we would go sideways like that and then finally come to some type of an apex that would give us the move one way or the other. But with the FOMC, of course, this could send it higher or lower regardless. But I think that the trend line here here is worth watching to see, and certainly if for whatever reason we break back below this trend line, well then watch out for certainly a nice short opportunity to arise for us. Okay, and the other thing, we can kind of look at this from the pattern type of perspective, right? What do we kind of have here? Right, bit of a shoulder, head, and we've got kind of an established neckline here as well. So if you want to look at it that way, I could also maybe maybe it'd be better on the daily, but could also be a little bit of a diamond top. We'll look at that here in a moment. Either way, impressive rally. Here we are, but has not been able to match the equal highs. I would say that's, interesting. But as long now as we are back above the balance range from the previous breakdown, right? Pretty much around, right, 3 points underneath 5,600. So it's those weekly lows from the 26th and the 19th, that general area. Anything back below that, I think the short would be somewhat back on, or at least look for a deeper retracement back into the previous week's range here, possibly back down to retest that 5,500, and then potentially, honestly, if it keeps going underneath that, we could go ahead and see back towards filling up this gap and coming down into that 54.50 area. So I would watch for that. Maybe we do not come all the way down and retest the prior weekly lows once again. Maybe we end up stopping short and hanging out around here. Now, I will say seasonally, if we hang out around here for 2 more weeks, it might set us up for some potential bearish consolidation for another move down. Seasonally, though, if we go into statistically, these next 2 weeks are the most bearish in the month of September. Does that hold true? We will find out. On top of that, well, do we have the high holidays coming up? We are going to keep an eye on when Rosh Hashanah starts to come our way. The old adage there, sell Rosh Hashanah, buy Yom Kippur, so we'll have to keep an eye on that as well. And I don't know when it is off the top of my head, but I think it's going to be coming up soon. Let's find out real quick. When is Rosh Hashanah this year? Okay, it's not until October 2nd. Okay, so going to be paying attention to see if we get underneath. I think the first, from the weekly perspective, we sell back, and we also talk about this as well, because we've got this weekly range now here established. What would be the most bullish thing that we could see? Whoops. Would be kind of hang out like this, right? And then give us the push, right? And this also works out because it's a 25% retracement of the prior week's range. We like that, most bullish. And again, under 50, we can also do a mid candle at 50%, but under that, well, watch out. I do think that 5,600, that 55, 57 is still going to be important here due to that prior balance that we had created, which we've been over here on the last couple of videos, of course. So if that breaks structurally, that's going to really tell me that I think we would see more of that sell side come in the market there. So let's pay attention to that. A couple of other levels we'll shout out here. We're going to get into our normal chart that we have been looking at and working with, but let's break it down. Let's go into the daily here so we can start to get a little bit more granular and take a look at what we've got based on last week's daily chart. Okay, here we are. Okay, so here really this 55-60 area is what the bears really needed to defend, right? And here's that weekly consolidation that we were just talking about, or part of it, I should say, from the structure retest. Now we're back in this balance range. Still over 56.15 here and over 5600. You have to still stay bullish, right? And only if we break this 55.60, then I could see from that daily perspective, well, watch out. We can probably trade back down real close to that 5,500 again, okay? And that's this bottom of this balance right here. And we start seeing sells underneath that, well, then we'll go ahead and start to attack and get into that range, like I said, and start of the bottom of the lows from last week. So we'll see what happens. But from the daily perspective, you have to say here we have, our swing low here, and what's technically this? It's higher. And now we're just back in the quote-unquote chop range. So there might be a lot of hesitation Monday, Tuesday. Again, also, I could also anticipate some choppier price action as things get adjusted for the contract rollover. Volume might be a little bit, some people are trading September, some are going to be trading the new contract. So it might be a little bit more choppy coming into Monday and Tuesday, so be a little bit careful. We did have, you can see here, just a face ripper up. Friday we saw still some decent moves to the upside, but it was a little bit more tentative. And now, after we had 1, 2, 3, 4, 5 up green days in a row, what would be the most reasonable thing to think of would be that sideways action. We've just made a run. We're back in a rest area again. Rest would not surprise me up until FOMC. But at least from this perspective, I could say from the daily now, if we really under that 56.15, well, maybe we could look for that short trade, 15 points down. Okay, maybe, but really breaking under that to retest this bottom of balance here, that would make sense. See how strong it is. And then maybe we get that pump back up. But we will see. Really getting over 56.66, that's going to give us that push up into that 5,700 and back towards the prior all-time high. So I think if you're more of a breakout quote-unquote trader, wait to see if we get some daily confirmations over that 56.65, 66 area. Be mindful for false breakouts, but you see a daily close or two, I think we will be good and ready to match those previous all-time highs. Okay, let's get a little bit more granular and look at some day trading levels for ES now. I think we've got a good game plan, a good view on some daily levels that we want to be cognizant of. Let's break it down and see what we got here. Still trading right in the same range, and actually there's something I did want to point out here. Which one was it? Okay, this was a little bit interesting to me. You can see here how we're coming back into this hourly. This is an hourly view on the 10-day. Is this the biggest fake out coming up right here? Coming back, retesting this prior area of where we saw a shift in the market and a big breakdown. Now we're coming back up, retesting this area of potential supply liquidity with a few, look at the angle of this move up. Very impressive, but this pretty steep, right? And the angle of attack, not too much of a fan of. We certainly have a trend line here that we can monitor. So I'm going to be watching to see if by chance we do actually start to break this trend line. We might trade back down. I haven't had this level marked off quite yet, but I wanted to wait to the video to do it. All right, so 56.13. Okay, and that's, more or less that 56.15 earlier that we were talking about on the daily level. So, I think that general zone there will be important to see if it is supported, and if it is broken, well, look where it leads us, just like we were talking about earlier on the daily chart, right back down to that 5,600, and that's going to be make or break whether or not they are able to see a bigger move to the downside. I'll be watching, keep an eye again here from that hourly 50, 55.61. We kind of were talking about that area as well. Excuse me. And we'll just watch to see how price really starts to react all just generally in this zone here as we approach the top of this balance. So we can watch to see if we break under 5,600. Maybe we get a clean shot down to the 55.80s, 55.75. Kind of come in and got some wicks up here at the top of this prior range. But, so I don't know if they'll stop it at 82 or 75. But that general area, I'll be watching, see if we get down there underneath. So I think that that's an interesting, I think this is a reasonable bearish view. Only again, if we break down under these key levels, right? We start to break up over the supply liquidity, then it's a different story. All right, but let's get into some of these day trading levels for ES. Okay. Some pivots here, areas of interest, right? So what's going to really have to happen? Well, without a doubt, that's not what I wanted to do. Without a doubt, we have continued to make higher highs, higher lows. And we are going to really need to see back over 56.41 half. We can get back over that. I think then we can make a nice move up into 56, 52, 50 area. My next target then. I'll be looking up over to 56.63 would be the next upside target. And if we get over that, well, then I think we'll just go ahead and look at that 56.70 right up in there. So that is what I am looking at for the longs. And for the short side, a lot more range to play with since we had such a big move. Really need to see some acceptance under 56.25, I think. And that can give us a chance back towards 56.12, 56.13. We're just, 15 area. Just talking about that. Under there, back to the 5600. We all know what happens there. If we break under, well, maybe some scales at 55.93 area could be reasonable. And then we'll look to see about getting into those 80s as we already discussed. I think there we've got a decent range of levels to look at overall. I personally, again, am kind of considering more of that chop type of price action into FOMC. I don't know how wide the range will be. That's anybody's guess, but I would not be surprised. Friday, it seemed like we were stalling. We had a nice move, but we started to stall out. The move wasn't quite as aggressive. So to me, even though we have to still remain overall bullish on the intraday level, certainly depending on where we open up in Globex and what's going on here, because really even any pullbacks into 5600 are just hourly lower, higher lows. So there's nothing really that's too threatening. But I would be more open to some type of a pullback within a range that we can go ahead and long to and join on that hourly trend overall. So I think maybe that 5600 is an obvious place to potentially try to get into for that type of trade, but we'll take it one step at a time, of course. But again, watch out for that possible price action that just in this area here, and we just end up trading within the range of Friday and Thursday overall. Okay. All right, let's get into the NASDAQ now and see what we can take away from that weekly chart. Oh, I didn't make the new chart. There's my water. All right. Same type of situation of that kind of compressing pattern here on the weekly chart for the Nas. Very similar. Getting a bit more tight here than ES as far as a potential apex. But same type of situation, and you can really see the divergence overall. We've kind of been talking about that. The tech sector is not... How do I delete this thing? Has not been overall as strong. But still, nevertheless, nearly matched the highs again of the previous week's range. But as we were looking at the compression, you still have to say, okay, weekly overall, it is still lower. But from here, we almost matching slightly higher, slightly higher. So that's what's giving us, of course, that compression there pattern. So which side will win? Well, I think everybody's just going to be waiting to see what Powell wants to do. Let's see here. Okay. All right. It's not one. Here we go. All right. So, I think as long as the NASDAQ here on the weekly can hold above the weekly low of the 26th, I think that's going to be my breaking point there. The high as well, right, of this previous balance range. If we start to get back below 19143, I would say that is a bit of a warning sign here for the market. We would be likely to trade back down into 18700s, 18750, anywhere in that area, right in about the middle part of our range, which is about the weekly high of the 13th. And then if we started to break under that, well, we'd be looking back towards the June 3rd lows, which would take us down right into about 18,400, basically, we can call it. So we'll have to see. As it stands, we're going to have to take out these highs. And really, I'm not convinced unless we start matching up over 19. I mean, you could... Honestly, you could really say, you got to say 20K. Because you got all this in here that the NASDAQ needs to make it through to really start to have a chance for coming up into the highs. And it's a big zone here. Obviously, we're working with the weekly chart. So, you know, from the bigger picture perspective, unless 19,780, 20K, and even, About 20K. It's the weekly high from for July 22nd. We start trading and holding some weekly. We start seeing some weekly candles hang out up here. I'll feel better about tech. Then we start seeing this, and then we can start talking about 20K, 20,500. You know, and start talking about potentially making our way up into this area here, back towards the highs. But we're not there yet. So it's still a bit vulnerable, in my opinion, a little bit more vulnerable than ES is, as ES is just very, very, very close to the all-time highs once again. Let's go down into the daily chart here. No, is it the default? Okay, here we go. All right. Okay, so now here's the area where this is basically the same equivalent area to where ES did break over. And as you can see, NQ is not there yet. So what we really need to see is price acceptance back over 19,725, 730, right? Unless we see that, it's going to be tough. Then we can go ahead and start to attack the equal highs from the end of August here, up at 19,970 and closer to that 20K once again. Right, we really start seeing acceptance over here. Now watch, you can see obviously this has been a big area. Fake out right here. We've got rejection, rejection, rejection. So watch for that potential fake out again. But see, you know, what did it give us? 1, 2. I mean, that was tricky. It gave us 2 days there. So maybe we would want to see a weekly candle close over. If you want to be safe, you could say 19,800 for that more of that bullish thesis to get up into the 900s, 19,900, and then potentially to that 20K. Got a small little gap there. And go ahead and reach for these highs once again. We break over this pivot high, well then it would be likely, in my opinion, we'll go up for that 20K, 195, 20,895 area. But now, if we see acceptance back underneath 19,400, gonna push me a little bit more towards that bearish bias. Look for price to potentially come back and retest this previous shift of structure here in the market. Back down up into the May 28th highs. You can see we had some reactions here as well. August 14th, the high of the September 5th. That would make sense. See how strong that really is. We could get trapped underneath there. I'd say that would be a little bit more bearish consolidation underneath that 19,150. Probably see a sell once again down into 1900. But if we hold over the 19,400, we can look at that as potential bullish consolidation for an attack back up into 19,600 and we're over that. 19,700 and the 725 zone. It's very likely that, again, considering the FOMC contract rollover, watch out. We might just consolidate here. We might consolidate here. So just be aware of what could be happening on the bigger picture if we are. I mean, certainly this range is tradable. 19,200 to 19,600. Yeah, so that's certainly tradable. But just don't be looking for that bigger quote unquote move. So we'll see what happens with the anticipation ahead of the Fed. All right, let's look at some day trading levels here for the NASDAQ. I will say on the daily chart, look, we're not even nearly. We're seeing that momentum here kick in a little bit. We weren't seeing that last week, or maybe it was on SPX when I did the video on that. Okay, well now we're starting to see it a little bit. So that's encouraging. See how nicely these daily levels worked here on even on the hourly chart. Looked below, failed, recaptured, and slingshot. Okay. So, what really needs to happen? Well, certainly it's hard to get bearish unless we really start to break down. But what needs to happen for the trend to continue? Well, I'm scared again for this consolidation like that can happen. But what really needs to happen? Well, of course, we need to make a higher high. It seems to me we would be more set up to, again, same thing on ES, that we'd have to put in an hourly or a 30-minute higher low first. Again, I don't know where it will stop, but potentially down to here. And then we can make that new hourly higher high. But for a new higher high to be put in, gonna have to get over 19,600. That's gonna be the level I'm watching. We get over that, I think it would be pretty fair to say we could run another 100 points back up into the 80s, or real close to 19,700. Right here we have to watch the high from the start of the week at 19,680. So anywhere in that area could be the next target over that 19,600 level, but I'm going to be watching that for the continuation. Otherwise, we could just chop in between. I could start to look a little bit more towards the bear side, breaking under a whole number of the figure there at 19,500, potentially bringing us back down real close to 19,430, 435. That's been a big pivot I have been paying attention to. We've seen at least some decent hourly moves, 30-minute moves underneath that from the day trading perspective. But still, it's hard to get really too excited about the short trade unless we get under 19,375. I think that would really make it easy here. Look at the move that we had, the hourly candle from Thursday, probably pretty thin structure, did not spend too much time here. So I think it would be safe to look, or at least anticipate, the potentiality of underneath 19,375. We see acceptance, thin structure here, would not surprise me to sell back down into the 19,300s. We've got a lot of wicks here, so maybe 19,325, but ultimately looking for 300, maybe getting down into 19,277. Gonna watch the highs here from, I think this is Wednesday, this wick as well, and that is basically right at the figure at 19,300. So I think that is a decent idea potentially for that short if we do see that 30-minute acceptance, or depending on whatever operating time frame you are using. Probably not a 1-minute close. Gonna need a little bit more confirmation than that, but That's what I'll be looking at for the short side. I mean, if there's some chance that we break under the 277, 270 area, well, then I'll be looking back down to test this next big candle right here, back right around 170, 19170. So I'll look at that as well. But as long as we hold over 435, and 430 and 375, still it's just open for this. Maybe we just, the first target, of course, is that swing pivot, but maybe then it would go ahead and make that new higher high. So we will see. Watch out again, though, as I said, contract rollover coming into FOMC could just trade around something like that. Certainly we can make money there, especially on the NASDAQ. But it could be more of a hit and run type of environment. All right. I don't think anything has developed in the dollar. I think we're just still hanging out in the same area. So I don't think we need to spend much time here. Yep, just looks like my bearish little balance range there. Not too much going on. What about in the big daily range? Let's take a look at this really quickly. Interesting. So this was the range that we've really been trading in for years now. We're right at the bottom of it. Coming into FOMC. Interesting. Very interesting. Does this finally, if this breaks, basically $150, $100.50, I'll probably go back down to $99.50. Would be the most likely situation. But also really wouldn't be surprised if it held this and we start to see an uptick in the dollar again. It'd be very interesting to see how this reacts. So far it's pricing in the cut, just selling off left and right. So I guess there's, what will it be though? 25.50, or they just hold it. That would be a real zinger. TNX. Talking about this bear flag. Been watching it. Kind of that H still. But it's not going to... It has to just at that matching low now. So it's got to get under 36.40. 36 for the next move lower. Certainly looks like from the technical way that it wants to. No shift in the structure unless it gets over 40. 39.80. So, all right. Let's get into, I think... Oh, one thing I did want to talk about. Gotta mention gold. All-time highs. We've been bullish on this one on my Twitter for quite some time. And this is just one thing I wanted to point out as far as that potential flight to safety. Wow, look at just that beautiful weekly flag there play out. This is one thing, though, I am cautious about as far as a flight to safety type of trade going on. That, along with the bonds, I was reading some people are saying the bonds is not really telling them flight to safety. But I am paying attention to that overall with the steepening of the yield curve, which we have been talking about, which actually has accelerated a little bit more in the re-steepening. So it, to me, who's right? You've got people rolling into gold and into bonds with the re-steepening of the yield curve. I don't know how that is not at least a big sign of caution. Let's get into some market internals and supporting data. All right, what's going on? Put call ratio kind of coming down here a little bit. Nothing too extreme yet, but I want to see what happens if it starts to get a little bit lower. Might find the bulls off sides soon. Not there yet. VIX still hanging out above 15, above our 1575. So it is still a threat to me, at least, that we could still have elevated volatility. Watch to see if it holds coming into this pivot here very soon. And if it is supported, again, we could see this move back easily to 18, to 19, to 20. Watch for that. We might just then get a rejection. Very possible, but we'll see. All right, and we were talking about the re-steepening here. Last week we had a 0.6 above the zero line, and now we are at a 0.9, paying attention to that. Okay, how's our breath doing overall? How many stocks here are trading over in the S&P 500 over their 50-period moving average? Looking still good, above 50%, coming back up. But let's see what happens. We're coming into an interesting spot once again as we get, right now our reading is 71% of the stocks are trading over their 50-period moving average. As we get closer to that 73, 75 area, I start to get a little bit of contradiction sign. So pay attention to see what happens there. Nothing really to report on the 200. It is just in a range. What about breadth overall? Making a very nice move to the upside. Not really a total contrarian reading yet, but getting close to some. But well above zero, super strong. Everything looking bullish there. But we'll see as it extends. And here we've got HYG junk bond still ripping. Now, okay, I was talking earlier, about the bonds and the flight to safety type of situation. And I was mentioning this on last week about why were the bonds still going up, these junk bonds still going up, if people are that concerned about the economy overall. And that divergence did play out with a stronger bounce than I anticipated, to be honest. It's starting to pull in a little bit here. I'll pay attention to that. But this is the one counter argument I would say against that flight to safety on the TLT and even the 7-year. Like, why would they be getting into this? But let's see, as this just hangs out, goes sideways, be watching for any potential divergences to develop there. And same thing here. 7-year just continuing higher. TLT, we talked about it last week, going to 100. It did kiss it. We finally matched these highs. So we'll see here. Over 101. I got 101.80, or excuse me, 180 or 81 cents. But I think really just the whole number, over 101, and this thing's free and clear. Really nice bounce here off that 96 area. Still, to me, I mean, it looks like it's setting up for a high and tight, but right near this resistance, what would be more healthy, or what I would think would need to happen, is we would come back and retest this prior breakout, and then we build up the momentum to potentially get up and over. At least, of course, if this happens, our first target, of course, is always matching highs, but get up and over. Then we can really start to see something. Starting to get a little spicy here on the overbought, oversold, but it can get more spicy. You can see over here. but I will monitor that as well. This is kind of telling me maybe we get a little bit of pullback. I haven't seen a shift yet, but it's hasn't turned red, but I will pay attention to that. If this falls, we'll watch TNX, see how that. I also do think it's kind of interesting as it's coming into this big breakout point, whether it's going to reject or not, right into FOMC. I mean, it's kind of a little eerie. The VIX, where are my VIX? So there we go. Okay. Well, we're back above the zero line in Contango. We'll have to see. Well, I'm going to be watching the VIX futures. Monday, Tuesday, if these start selling below the zero line coming to FOMC, I think that would be a warning sign for the market's reaction. I don't know, again. At least they're going to be more, what's the word I'm looking for? Uncertainty. And you know the market does not like uncertainty. VVIX still above 100. Not above the 103, 105, but still in an area where I think it's saying to still be a little bit cautious. We certainly get back over that 105, 103 pivot, but we're close enough to it where it could be setting us up for another surprise if we get a push. But I think volatility, at least from where VVIX is and VIX, it's not saying to me that it's something that's out the door quite yet, and that we still should pay attention to that. We'll have to see how the new contract rolls over here in VIX too, because that is going to happen on Friday as well. So I think that's everything I wanted to cover this week. Again, I'm not trading Friday. That's for sure. But I'm going to definitely be cautious either way ahead of FOMC. So again, I really appreciate you guys spending the time with me on the video. Please like, share, comments. Let me know what you guys think below. If this is your first time watching the video, it would mean a ton to me if you subscribe to the channel. And for all the loyal supporters, I really appreciate you joining in with me every single week to prepare for these markets. And remember, as we always say, a prepared trader is a profitable trader. So let's plan our trades and trade our plans. Wishing you guys a great Sunday, rest of the weekend. Take care. I will see you out in the markets.